Hello everyone, welcome to Azzad Asset Management's presentation today, Global Community Investing as an Asset Class. I'd like to thank everyone for being here. My name is Josh Brockwell. I'm Investment Communications Director here at Azzad. Joining me today is my colleague in the Marketing and Communications Department, Amina Rubin. Amina, thanks for being here.
Thank you.
And we're here today to talk to you briefly about global community investing. Specifically, global community investing through socially responsible trade finance investments. As the introduction to today's presentation states, opportunities for the socially conscious investor abound in the developing world. The challenge is to find and invest in community development deals that make financial sense. Today we're going to introduce you to Islamic trade finance through real-life projects like those currently available in the Azzad Wise Capital Fund, ticker symbol WiseX, which is our alternative fixed income mutual fund. WiseX avoids interest-based transactions, it avoids investing in harmful activities, and it supports high-impact investing in communities around the world. And with that, I'll turn it over to Amina.
So first, we're going to give a little background on Azzad Asset Management, the concept of halal investing, and on our company's ethical investment philosophy. We're a boutique firm located near Washington, D.C. Azzad was founded in 1997 and is the investment advisor to the Azzad mutual funds, including the Azzad Wise Capital Fund that Josh just mentioned. Our vision at Azzad is a world in which investment capital helps build a sustainable and equitable economy. Our dual mission philosophy aims to generate a competitive, long-term financial return while using investment capital to promote a sustainable economy and positive societal impact. All of our products and investments comply with halal investment guidelines as established by the Accounting and Auditing Organization for Islamic Financial Institutions, or AOFI, and AOFI is essentially the Muslim FASB. We're also a member of the Forum for Sustainable and Responsible Investment, or USIF, and the Interfaith Center on Corporate Responsibility.
So let me take a moment here to further explain or elaborate on a term Amina just evoked, which is halal investing, sometimes referred to as Sharia-compliant investing. The definition of that word Sharia, which is much maligned these days, is actually, it means the path that leads to water. In other words, it's the means by which our thirst for guidance and social justice is quenched. And as such, halal investing can be seen as part of a wider movement towards the promotion of sustainability as a key element of economic life. That's the way we like to think of it here at Azzad. The basic premise of halal investing is that no one should purely profit from money. This leads to a shift away from the short-term transaction and towards a longer-term equity-based relationship. At Azzad, we do this by following the 7 tenets of halal investing, which you see on your screen now. They're derived from the AOFI guidelines that Amina mentioned, and they range from screening out investments that deal in harmful activities, for example, alcohol, tobacco, weapons of mass destruction, private prisons, hydraulic fracturing, all the way to calculating charitable giving totals for our Muslim clients who choose to observe that practice.
We also look at companies' debt ratios. For example, we don't invest if the debt to market cap ratio is more than 30%. And we use the concept of risk and equity sharing to support high-impact investing in underserved communities. One reason we follow that model is because of the Islamic prohibition on giving and taking interest and the trading of risk. So today we're going to talk about some specific products that incorporate this philosophy. So let's look at some examples of how we put these principles into practice with the trade finance opportunities available through the Azzad Wise Capital Fund. Josh?
Okay, thanks, Amina. Let me give you first a little info on the Azzad Wise Capital Fund, which you see on your screen now. The fund seeks to preserve capital and provide fixed income without profiting from interest. It's categorized as a short-term bond fund, and simply put, our mission is to connect investors with institutions in need of capital in a responsible way. And that's done in the hopes of helping both sides profit from a mutually beneficial transaction in which all parties have a stake in the outcome of a particular business venture. It's sometimes called that double bottom line in socially responsible investing. So again, on your screen right now is the performance and fund allocation as of September 30th, 2015. The primary asset class in the fund is Sukuk, which is sometimes referred to as Islamic bonds. If you're not familiar with those, please take a look at our YouTube channel. We've got some great educational information and videos on that. But today we're going to talk about another slice of that pie, which we've only recently added, which is trade finance. So one of those alternative asset classes that, again, we've just begun to deal with and invest in at Azzad through the Azzad Wise Capital Fund is halal or Islamic trade finance deals. So let's talk a little bit about it, but to do that, we're first going to need to talk about some terms and define them first. So trade finance refers to facilitating transactions between buyers and sellers. Various intermediaries or go-betweens like financial institutions, banks, mutual funds, in this case the Azzad Capital Fund, can participate in these deals. So this might get dense for just a brief moment, but bear with me because it's important to understand the concept. Trade finance helps to settle the conflicting needs of the exporter and the importer in a relationship. An exporter needs to mitigate the payment risk from an importer, and it's in their interest and benefit to accelerate the receivables to that importer. On the other hand, the importer wants to mitigate the supply risk. They want to make sure they get the goods from the exporter, and it's their interest to receive extended credit on their payment. The function of trade finance is to act as this third-party intermediary to remove the payment and supply risks while providing the exporter with accelerated receivables and the importer with in an export. In a very simplified form for trade finance, in Islamic trade finance in particular, the exporter would sell the goods to the third party. The third party would then mark up those goods and pass them along to the importer. The exporters get their goods out faster and get paid faster. The importers get the product faster. So again, to elaborate on a few of those significant differences when engaging in Islamic trade finance, there is, of course, the prohibition on the giving and taking of interest. Murabaha, which you see on your screen there, is one way to incentivize financial institutions like ours within the AOFI/Islamic restrictions that Amina mentioned earlier. Murabaha is a markup or cost-plus arrangement, which I just explained. The financier is given a fixed amount when an asset is sold to a customer for payment at a later date. When the buyer and seller agree on a certain profit to be added to the cost, this is profit and loss sharing. And that arrangement can help all parties in the transaction. We're going to give you a few examples today to show you how investing in Murabaha notes can have a positive social impact.
So let's talk for a minute about why investing in trade finance deals matter from a social responsibility perspective. One of the biggest reasons is the ever-present problem of global poverty. However, extreme poverty has fallen dramatically in the developing world since 1981, and according to the WTO and the UN, trade has been a primary reason for this. In 1981, about 70% of the developing world was living on less than $2 a day, but that rate has fallen to just over 36% in 2011. And while this is good news, it still leaves more than 2 billion of our fellow humans living on less than $2 a day. While extreme poverty has declined in all of the regions measured by the World Bank, much still needs to be done in places like sub-Saharan Africa, where 69% of the population still live on under $2 a day in 2011, and in South Asia, where the poverty rate is still around 60%. And this is where investments such as the ones we're about to show you can help continue poverty alleviation.
So trade has played a major role in the successful deal more in the years to come. But we have to make sure that the poor feel the full benefits of trade. We at Azzad, along with the Azzad Capital Funds sub-advisor, Federated Investment Management Company, have identified trade finance as a key issue here. Up to 80% of global trade is supported by some sort of financing or credit insurance. But developing countries are still suffering, believe it or not, from the consequences of the 2008 financial crisis. The supply of credit has not yet returned to normal levels, and at this point we're still seeing big financing gaps, particularly in Africa and Asia.
The estimated value of the unmet demand for trade finance in Africa right now is between 110 and 120 billion dollars. By bridging this gap, we would unlock the trading potential of many millions of individuals and small businesses across the continent. The smaller the business, the bigger the gains. In Asia, the unmet demand for trade finance is estimated at over $1 trillion. And as a result, opportunities for growth and development are often missed. Businesses are deprived of the fuel they need to grow, and we are prevented from leveraging trade's full power as a source of development. But we have begun to respond to the problem, and here is how.
Enter the Islamic Trade Finance Corporation. So the International Islamic Trade Finance Corporation is an autonomous entity within the Islamic Development Bank Group, created with the purpose of advancing trade to improve the economic conditions and livelihood of people across the world. It started operations in January of 2008. And as a leader in Islamic trade finance, the ITFC deploys its expertise and funds to businesses and governments in its member countries. Its primary focus is to encourage intra-trade among OIC member countries. That's Organization of Islamic Cooperation, around 60 or so member countries there. The ITFC has unique access to governments in its member countries, and it works as a facilitator to mobilize private and public resources towards achieving its objectives of fostering economic development through trade. The ITFC focuses on development and business promotion in many of the countries that have not benefited fully from those gains from global trade over the last 30 to 35 years. And they're open for business. We've already begun partnering with the ITFC on trade finance deals through the Azzad Wise Capital Fund.
So now we're going to show you two case studies that show how the ITFC makes trade finance socially responsible. So non-disclosure agreements and selective disclosure rules don't allow us to talk about the specific projects we're investing in right now, but we're going to show you two examples that are similar to our current investments through our relationship with the ITFC. First, let's look at the Indonesian coffee sector. For this project, the ITFC designed a $1 million Murabaha trade finance operation for a group of 13 coffee growing cooperatives in Aceh province in Indonesia. The goal was to meet the co-op's pre-export financing requirements, essentially to pay the farmers a portion of the contract value when they deliver the coffee beans and while the beans are being processed prior to export. The operation has two main effects. First, the co-ops have funds to cover their costs for processing and packing the product. Second, and more important, by providing an upfront payment to the co-ops, the farmers in the co-ops are able to get funds earlier than if they had to wait to receive payment from the final buyers. The ITFC's financing has helped to get a better price for the coffee because there's no longer interest charges. Instead, a lower flat fee that is agreed upon in advance is paid as part of the cost-plus arrangement. This arrangement has helped fuel the growth of fair trade coffee co-ops. Because they can pay cash, it's now easier for them to attract new members. It also brought in 15 new buyers, which also allows the co-ops to continue expanding.
So why does this deal matter? Here's what makes it stand out. The 13 cooperatives in Aceh are fair trade certified, which means that they're part of a sustainable system that ensures that coffee farmers are paid a fair price. Once the coffee is delivered to warehouses, the farmers are paid a percentage of the total contract. The farmers now no longer have to wait 45 days for payment from the buyer. They receive cash now on delivery. And though the finance amount is low, thousands of farmers are benefiting from the ITFC finance arrangement. This is especially important for the Aceh province. Many of us might remember it was especially hard hit during the 2004 tsunami and is still emerging from a civil war. So now let's turn to the Gambia and its agricultural sector, specifically groundnuts, which I've recently learned are in fact a peanut. So in Gambia, groundnuts used to be the country's biggest cash crop, but the sector died at the turn of the last century from erratic rainfall, seed shortages, and a system that allowed crops to be bought and sold on credit, and groundnut farmers to go unpaid for months. For decades, the industry had been relying on financing from local commercial banks at high rates of interest. Moreover, those banks were often undercapitalized, and as a result, production suffered. The net effect was a downward trend in groundnut production, and late payment to farmers also aggravated their financial uncertainty, often forcing them to resort to taking small loans to meet their daily financial needs, sort of the equivalent of payday loans here in the United States. Now, commercial growing of groundnuts has returned, and once again, they are the country's main cash crop thanks to the ITFC. So in 2010, the ITFC stepped in as an arranger and extended a Murabaha, there again, that term, it's a cost-plus financing solution, in the amount of $14 million for the Gambia Groundnut Corporation, or GGC, to finance that groundnut commodity.
Thanks to this arrangement, the Gambian groundnut industry now has access to adequate financing to purchase the country's entire commercial crop. The lower fixed cost means improved viability for the GGC as financing and operating costs are reduced. During the last season, all groundnut crops were paid for in full and on time without recourse to any form of credit buying. So since farmers are now able to sell their crops and receive cash on delivery, they feel more confident participating in the groundnut production, and the result has been increased earnings for them, which is, of course, an important step toward poverty reduction. So here's what stands out about this deal from a socially responsible investing perspective. The operation was designed to benefit tens of thousands of small-scale farmers whose livelihood depends on this crop. About 70% of the Gambia's active labor force is employed in areas related to groundnut growing and processing, so streamlining this industry impacts more than just the farmers. It has a huge impact on the country's economy as a whole. The deal facilitated increased production of groundnuts, since farmers are assured of receiving payment for their crops up front. And according to the USDA Foreign Agriculture Service, improving groundnut production in the Gambia can contribute to food security, poverty reduction, and national trade development. Another benefit is that the ITFC was able to use foreign currency, in this case US dollars, to finance local purchases, thereby increasing the country's flow of foreign currency.
All right, thank you, Amina. And remember, of course, everyone, that our mission is to connect investors with institutions in need of capital in a responsible way. So those are two examples of how that happens. So there you have it. Through the Azzad Capital Fund, shareholders will be able to invest in these and other worthwhile opportunities, or similar opportunities, all while promoting impact investing in communities all over the world. We think it's a novel way of making fixed income socially responsible. And we think trade finance has wonderful potential to improve standards of living in many of those countries that have yet to experience the full benefits of trade. So that's going to conclude today's presentation. Thank you all for your time. Please visit our website, azzadfunds.com, where you can download and read your copy of the prospectus for the Azzad Capital Fund. The prospectus contains more information about the fund's risks, expenses, and investment strategy. While there, you can also sign up to receive our monthly e-newsletter to get more information about Islamic trade finance and other Islamic financial products and services. Finally, be sure to follow us on Twitter @Azzad Funds and like our Facebook page, facebook.com/Azzad Funds. Thank you all for your time.